Hello again, everybody. It's Harry Boxer, the Technical Trader. It's Monday night, August the 8th, 2011. That's 8/8/11. We're going to remember this day for a very, very long time, in my opinion. The numbers that I saw today in my 40 some odd years of technical analysis are almost unprecedented. As a matter of fact, some of the numbers have never been reached. We've reached the following levels today: a minus 438 on McClellan oscillator. Now, I did some research tonight and I went back. As long as I can remember, I've never seen a number that deep. 394 was the worst number I've ever seen. And so we exceeded that today. Advanced declines on New York, 46 up, 3,113 down. On NASDAQ, 122 up, 2,590 down. If we total them up, you have 168 stocks up and more than 5,700 down. The ratios are astronomical and have never been reached before in history. Up-down volume will blow your mind. 25 million shares up, 2.44 billion down. That's about 100 to 1. And on NASDAQ, the numbers are even worse. 26.6 million up, 4 billion down. I'm blown away by these numbers. I've never seen these technical numbers ever. The most extreme oversold readings ever, accompanied by the most extreme technicals ever. Tonight, I'm not going over individual stocks. I'm going to go over some of the indices to see where we're at in time, because it's going to be fruitless to try to tell you where support and resistance is until we get some kind of clarification on these smoke clears. Look in front of you, you have the Dow Jones 30 stock index. You'll see that the indices over the last year or so have gone from about 9,700 up to 12,700, came down, bounced, double topped around 12,750, and rolled over hard. And we've gone down nearly 2,000 points in a couple weeks on the Dow and broken key short-term support right here. That could lead to even lower levels, but at this point we're so oversold, I'm looking for a snapback to test that level. And it would not shock me to see the 500 to 700 point rally in the next few sessions, although we may come down tomorrow, one more step down before we actually get that sharp snapback. So let's look for that kind of action tomorrow. Going through the rest of the Dow Composite Indexes, the transportation average has rolled over from almost 5,600 to 4,300. That's a 1,250 point drop in about the last 4 weeks, but in the last 2 weeks, it's dropped over 1,000 points for more than 20% drop. That's a historical drop, to say the least. You can see the key support here that was broken, and obviously the trend line was broken a couple weeks ago. Where will we snap back to? Well, I'd be looking for something on the order of a maybe 350 to 400 point rally back, somewhere up 4,650, something of that nature, perhaps. The utility index, which had held up very well and was at multi-year highs, had rolled over from about 440 down to about 390. That's a very big percentage drop, and you can see key support in this zone down here. NASDAQ Composite Index, NASDAQ 100, excuse me. Let's look at the composite real quickly. Very similar action. A massive head and shoulders top, a spike down of unprecedented proportions, dropping from 2850 down to 2350, or 500 points in just a couple weeks. It's taken us down about 18%. The NASDAQ 100 index rolled over from about 2420 all down to 2060, and that's about 380 points for about also about a 17, 18% drop as well, very quickly. Now we took out this lateral price support here, came down to that high in this area in here near the trend line, which was, by the way, pierced at the close today, and could result in a snapback. But the problem is, when you get a thrust to the downside like this of unprecedented oversold proportions, you usually are at the beginning of a move, not the end of a move. So what I'm looking for, although it does set up a short-term snapback, it's probably an indication that we should be exiting. At least we'll take a look at it when we get up there. But if we get a snapback that fails here and starts to roll over, we got to be very careful. What I do believe is going to happen, though, is a snapback that then goes into a consolidation phase before the next rollover. The Russell 2000, excuse me, has had a very dramatic fall from 857 to 650. That's more than 200 points, or 25%, or nearly in that range, and a dramatic drop below the neckline of the head and shoulders top as well, even more than the measured move, which would have taken it down about 700. So we've dropped precipitously and dramatically all the way back to the neckline of the head and shoulders pattern that was broken a year ago. Again, a snapback here may not take as much more than 700, 720 zone, but could all get all the way back towards 750 near the neckline of the breakdown. The S&P 500 has had a dramatic breakdown of the short-term channel, the longer-term channel. Let's step back a little bit and look at the S&P 500. You'll see that the way I've drawn the channels here, we rolled over and broke key support at the neckline of the head and shoulders. We went through this double top here, came down to this pullback period back in November of last year and broke through that. And now it was at the neckline of this head and shoulders pattern that was broken in September of 10. We're right there. So this is an area where we could snap back easily to 1160, possibly up to 1200, 1220 area. But we'll have to just see what happens in the next few sessions. Again, we may get a little bit more oversold tomorrow. That would be a tremendous buying opportunity, in my opinion, for at least a short-term trade for you traders. So obviously quite concerned with what I'm seeing, and as everybody should be. This is dramatic topping pattern, major head and shoulders top, and a dramatic breakdown here. You've seen the Dow 30, I believe we've shown you that. Perhaps not the Dow. The Dow is broken hard and has gone from, yes, that's right, about 2,000 points. So we've had, as dramatic as it gets, a pullback. Never seen this kind of a dramatic high volume spike down with the kind of technicals and breadth we've seen. But it doesn't augur well for the future markets, that's for sure. So let's take advantage at the very least and wait for a pullback to exit positions or lighten up, or at the very least, hedge your long-term positions on the next rally up. And you may want to consider taking a short-term trade to the long side. If you are short, this is such a severe decline here, I would suggest anybody at least temporarily cover the shorts and move to the sidelines if you don't want to go long, and or consider exiting your put options or your ETFs that got absolutely blown out to the upside with the FAZ, for example, going from 49 to 81 just in the last couple of weeks. So anyway, there you have it. That's the review for tonight. We'll be keeping close tabs on the markets and reviewing more often over the next day or two with more frequent videos intraday. You guys have a good evening, and let's get them tomorrow. Good night.